Chirag Shah is also with us from ICICI Securities. Chirag, hi, good afternoon. The same question to you. Do you think there would be a scale back in terms of the guidance and your overall numbers, or overall take on the numbers, quite clearly a miss, at least at this point in time? Prima facie looks like a big miss.
Yeah, hi, good afternoon, Chirag here. I don't think so it's a miss because there is a one-off. I just got the time to go through the press release of L&T, and it states that they have taken restated their numbers with the adjustment of the hydrocarbon subsidiary. Because if you knock that off from Q3 FY13 number, then the revenues are up 12% YOY. And if I look at the order inflow numbers, they are also pretty line estimate, and EBITDA margin looks quite positively surprising for L&T. So all in all, I don't believe that it's a shocker of a number because there is a big restatement that has happened in the annual quarterly accounts of L&T.
All right, let's just reiterate that point that Chirag is mentioning. As you can see in the press release, if you go to the fourth page of the press release, because these numbers are excluding the performance of the hydrocarbon business segment, which has been transferred with effect from April 1, 2013 to L&T Hydrocarbon Engineering, which is a wholly owned subsidiary. So if you were to take that out, in that case, year-on-year number is actually 12% growth of about 14,500 crores. Does that change things a bit, Pragya, in terms of what L&T is saying, or were these numbers in any case factoring that demerger in?
Anuj, the street was not clear, if that demerger would kick in as far as this particular quarter is concerned. But even if you go by that numbers, the numbers still are actually, way below what the street was expecting. The company had to report a fair bit of a growth in this particular quarter, and even at about 14,500 crores, if the top line comes in, then, even in that case, it is still a decline, of a fair bit on a year-on-year basis. So, I think main concerns on that particular stance actually stand.
Okay. Chirag, a word on the margin picture. The big problem for L&T, or perceived problem for L&T, was that because of their international business, their margins will come down quite significantly. If at all, they've actually managed to improve on the margins. Your word on that, and how do you think the stock will react tomorrow morning?
Again, I reiterate my point that given the way they have restated the hydrocarbon numbers, and hydrocarbon business being a very lumpy nature in itself, has given a big push to the EBITDA margins, given that segment has been removed from the overall reported numbers, and that is why there is a big boost up in the EBITDA margins of L&T. And if you look at the street sphere of what they were talking about in terms of infrastructure margins, they have been continuously over 11%. Even though the intensity of order inflows in infrastructure has risen up in H2 FY12 and FY13, that might have its own reflection on FY15 and 16 numbers. Even taking a conservative view, we believe L&T will be able to go about 9.8 to 10% kind of margins going ahead, even taking into account the worst case scenario for L&T.
Chirag, if I can just squeeze one question in, as far as the order inflows of the company are actually concerned, on that front, if you take the number of about 21,720 odd crores which they've reported for the balance year, how much would the company now need to do? And do you think, of course, quarter four is a much stronger quarter for the company. Do you think it's a possibility they will be able to achieve that guidance?
Yeah, I think so. Given the kind of announced orders and the unannounced orders ratio has panned out in this particular quarter, it has been a kind of a 70-30 kind of a scenario for L&T, which is not a regular feature for as far as the quarterly run rate of order inflows is concerned. But if you look at the first half, they had announced order inflows of 52,000 crores, and this quarter they have announced approximately 22,000 odd crores. So that sums up to a tally of 75,000 crores of order inflows. But the reported order inflow has, or the cumulative order inflow for the 9 months has come in at 67,000 crores, which means, which implies that there is an 8,000 crores of adjustment, and that I think relates to the hydrocarbon business that has been restated with the quarter. So one has to really rely on the management guidance in terms of what kind of adjustment has happened in terms of revenues, and what will be the actual guidance that L&T will again rework with the actual restated numbers again.
Okay, so just to reiterate that point, and we need to maybe dwell further on that. You need to take a look at these numbers again, because the hydrocarbon business has not been looked at. If you were to exclude that like to like, the net sales are up 12%. Because even if we go by a poll of 17,000 crores, we were comparing that with the previous year number of 15,429 crores. That's not the case now, because according to the company's press release, even this 14,500 2,500 crores revenue actually means a 12% growth from previous year's numbers. So there is a bit of a readjustment of numbers which is taking place right now. Nitin, does that change things a bit over here?
Yeah, as Chirag says very rightly, the press release is in front of me as well, and I can go through it and say that it's a 12% growth ex hydrocarbon business, and so one needs to. So if you see on a trend like to trend like basis, they have delivered what we were expecting, which is 11% YOY growth, excluding hydrocarbon. Now one needs to get some sense from the management whether the segment which has been taken out does carry similar kind of a growth or not. So this means that this going back and revisiting my earlier comment, there is not a great miss on the top line because like to like is grown up by 12%. Even if there was a marginal decline in the hydrocarbon business, you still are very close to what the street was expecting. I don't expect that the hydrocarbon business would have declined by 50% for to be so negatively surprised. So hence, broadly right in terms of the top line. Margins anyway we all saw was a surprise, and hence not seemingly bad numbers as it appeared to be on just looking at simple flash.
Nitin, just one question on the order book characteristic of the company. If you see, you go through the press release, except the infrastructure segment, the order book in pretty much all the other segments of the company, if you consider power, metallurgical, engineering, pretty much everywhere, they've reported a decline in the overall order book. Only the infrastructure order book is up by about 28%. What do you think is really happening here? I mean, is the execution a fair bit of a problem, or are the orders not coming in? Where do you think the order book stands of the company?
If you look at the infrastructure orders of the company, there are a fair mix of India orders as well as the Middle Eastern orders. Middle Eastern order inflow was very strong in this quarter for the company, and that is why you see this number. And we all know that in India, most of the industrial capex is not happening or orders are not getting announced. So, that is not a surprise, whereas infrastructure orders coming in from Middle East and coming from India because the competition is pretty much very weak. So, which is panning out in line with expectations that if your competition is weak, these guys will continue to gain ground. Middle East, they are focusing much more, and that is why the growth. Not that concerning because on the side, you see the margins also of the infrastructure sector. Margins remain pretty much steady, low double-digit numbers, which are not bad as compared to all the other sectors.
All right, Nitin, Viral and Chirag, thanks a lot to all of you for joining in. So the short point is that these numbers need a bit more analysis. We'll do that because the hydrocarbon business has been excluded, and based on that, the company says that the net profit or the net sales have grown about 12%. Yes, you could argue that whether they'll be able to meet the order book guidance or not, and that would be a disappointment. Final word from you, Pragya, before we toss back to Nantara.
Really, the management commentary as far as domestic ordering is concerned, if that has picked up, are they now looking to scale down? The fact that, now the margins have actually beaten the estimates. If they come in at about 11.6%, then that's clearly a beat. So, they were talking about 10.5% plus margins. Are they on trajectory to achieve that? Characteristics of those nature would be important things to watch out for in the management commentary.